Crypto, humanity's future or nightmare? Welcome to Worldly IQ. Before we start, be sure to like and subscribe to the channel. The earliest form of what we know today as money was not always in paper form as we have it today. Before then was the bartering system, where people exchanged goods and owed favors. But as communities grew larger and larger, there needed to be a more efficient way of exchanging goods and services. Enter currency. The earliest forms of currency were the cowrie shells, whale tooth, and other pieces of scarce objects. So that meant for the first time in history, people could store up wealth, and people that had excess of it became powerful. But these tokens for currency were simply not enough, or even as proficient, considering they had no intrinsic value. So rulers began minting coins from precious metals and stamping their emblem on it that guaranteed the coin's weight and value. The oldest known coin mint was found in China and dated to about 2,600 years ago. But even this had its own issues, one of which was counterfeiting. People could mix precious metals with other less scarce metals and have debased currencies worth less than face values. Counterfeiting would not stop here. Also, because of their heft, carrying around large quantities of coins could be exhausting. Enter paper money. The earliest form of this was also recorded by the Chinese, where rulers would have their coins back at home and issue out IOU certificates as they traveled. People understood that these papers had the value they claimed and could be easily exchanged for said values. In fact, paper money has been backed by gold until at least the 70s, when it instead became backed by trust of the general public. With paper money came even more counterfeiting. This was such an epidemic at the beginning of the history of paper money that different regions had severe punishments for them. In China, counterfeiters could be decapitated. In fact, it was stated so as punishment on the paper money. In Britain, counterfeiters could be burned at the stake, and in the US, some colonies had them killed. Today, the punishment is way less harsh than it used to be. But while paper money has its numerous advantages, it also has its disadvantages. One of which is inflation, where there's too much money in circulation in comparison to goods sold. But this is not only limited to paper money. In the 16th century, Spain bought home massive supplies of additional precious stones. This led to inflation as there was so much money in the economy, the prices of goods skyrocketed. The same issue is happening today in Venezuela, where hyperinflation is being experienced. However, this is not the end of the evolution of money. In 2008, Bitcoin was introduced to the world, and as of 2010, at least 3 million of the 21 million Bitcoins available was mined. That number stands at 18 million mined today. The value of Bitcoin at its earliest stages was subject to discussion on a Bitcoin forum, a platform created by Nakamoto, the elusive creator of Bitcoin. Today, the value of Bitcoin is more or less controlled by market forces. Then, one did not need a very powerful computer to mine Bitcoin. A normal CPU was capable of handling mining. Perhaps the most famous transaction performed during this period was when Lanlo Hanyecks made the first documented purchase with Bitcoin after he bought 2 Domino's pizzas for 10,000 BTC. That is apparently $390 million today. Since Bitcoin, there has been introduction of other cryptocurrencies like Ethereum and Litecoin. At the moment, there are at least 10,000 cryptocurrencies available in the market. Like all new introductions to modern economics, crypto being so new to the world has its pros and cons. We shall now weigh in on these pros and cons of crypto to help you have a more informed understanding of cryptocurrencies. Let's dive in. When Bitcoin was introduced in 2009, it was more or less a direct response to the fickle nature of fiat economy. Nakamoto, the person or group of persons behind the cryptocurrency, critiqued both the central banks and the government. Because paper money is backed by trust and can be printed as many times as the government wishes, it is very easy for inflation to occur. Bitcoin sought to end this by having only a limited amount in circulation. There is only about 21 million Bitcoin available. Bitcoin also offers a more transparent system of monetary transactions. Crypto eliminates the need for a singular third-party figure, the bank, which can be prone to failures and irregularity depending on time used. Instead, crypto offers a peer-to-peer arrangement for transaction, one where everybody can hold accounts and not just one body, the bank, is accountable for what goes on to where. All of these are recorded on a publicly distributed blockchain ledger. This system reduces the risk of double spending and other fraudulent transactions. Even though these transactions can be publicly viewed, there is still an added feature of privacy because transactions are pseudonyms, which means you do have an identifier, your wallet address, but it doesn't include any specific information about you. Because of the elimination of the third-party body, there is a relative ease with which transactions are carried out in this space. Unlike the banking system that might take up some days to approve a transfer, crypto transactions can be completed in a matter of minutes. Once the block with your transactions is confirmed, the funds are immediately released for use. There is also the matter of the cost involved in transactions, which is relatively lesser than what banks offer, especially for overseas transactions. Crypto also offers a more jacked-up security model, whereby unless access to your private key is stolen, there is virtually no chance of a third-party interference with your account and no fear of identity theft. However, if you do lose access to the private key of your crypto wallet, there are no options to recover your funds. Also, because there are multiple computers on the blockchain for cryptocurrencies, such as Bitcoin and Ethereum, to effect a change on the ledger would require enough computing power to confirm multiple blocks. This is prohibitively expensive. However, impressive as all of this sounds, there are still problems associated with cryptocurrencies today, one of which is cyber attacks. While the blockchain is generally secure, other items like exchanges and wallets can be prone to hacks, and in fact, there have been numerous instances of such occurring over the years. If you follow the market closely, you are aware of its high volatility. In May 2021, when Elon Musk stated that Tesla would no longer accept Bitcoin as legal tender, the value of the cryptocurrency dropped in value at around 15%. There would be other instances of such fluctuations throughout that month. But Elon Musk is not the sole factor responsible for the volatility of the market, which in itself is ironical, especially as crypto is supposedly decentralized. Other factors like supply and demand, investor and user sentiment, even media hype plays a factor in the volatility of this market. Because of this, some economists speculate that cryptocurrencies are going to be a short-lived fad. In this market, there is close to no regulation from government bodies, and so there's little protection in the market against scams, widespread fraud, or even market manipulations. In 2020 alone, an estimation of $7,800,000,000 was taken by scammers. The anonymity provided by cryptocurrencies can be a double-edged sword. On one end, it can be a tool for circumventing dictatorial regimes that control a country's central bank. On the other end, this anonymity can protect criminals from being tracked by the police. Although most recent transactions are not used for criminal activities, one of the earliest adoptions of Bitcoin was by Silk Road, a black market platform popular for money laundering activities and trade of illicit drugs. Lastly, usage of cryptocurrencies has sparked concerns of its environmental impact. According to reports on Forbes, if Bitcoin were a country, it would rank in the top 30 energy consumers in the world. This is because to verify transactions, Bitcoin requires computers to solve more tasking math problems, which is more energy intensive than when carried out by centralized models like banks. It is especially concerning now that there are calls for climate action seen as the planet keeps getting warmer with each year and ecosystems are disappearing. It's still quite early to predict whether or not this revolutionary invention is our future or if it would be our nightmare, and whether or not it's really just a speculative bubble, as some economists would say. Experts are divided on an opinion. Only time can tell. This is Worldly IQ. Thanks for watching. If you learned anything new, share this knowledge to a friend and be sure to like and subscribe and turn on the bell for post notification. Thank you.